Hello, very good morning to all. Welcome to today's Daily Dose of Market Insights. I'm Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. So before, give me a minute. I think I need to share my screen. Sorry about that. All right. Okay, give me 1 second. I think there's a bit of technical issue. I hope that you guys could see my screen. Okay, good. Okay, so very good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA. I'm Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. Very good morning. Today will be Wednesday, the 13th of March, 2024. All right. So before we start our daily dose of market insights, let's take a look at the disclaimers first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. These losses can exit deposits. The presentation is not an offer or solicitation to buy or sell, no financial advice or recommendation for any investment product, as well as any forecast, prediction or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so before we jump straight into the short-term technical outlook on the various cross-asset classes, let's have a recap of what has taken shape yesterday in terms of the performance of the global markets in line with the we call it the release of key events or economic data. So yesterday primary key economic data release was the all-important US CPI data. So US CPI data actually came in slightly hotter than expected. So if you look at the on my screen over here, okay, so we could see over here, this is the CPI data. So the focus over here for sure will be the core. Okay, let me expand my screen so that you guys could see. Okay, good. Yeah, so the focus will be more on the core inflation rate rather than the headline inflation rate. Why? Because the headline inflation rate consists of much more volatile items like food and energy. So if you look at the core CPI data in US for the month of February, so on the year-on-year basis, so this year-on-year basis, right, what we could see over here is it actually increased 3.7%. Market consensus is 3.7%, but for it came in at 3.8%, slightly above, yeah, but still below the previous month of January of 3.9%. So the month-on-month increase also a slightly we call it a 0.1% point increase from the consensus of 0.3%, but it's in line with last month January figure of 0.4%. So if you look at the trend on the year-on-year basis, okay, let me expand the screen. So it's not really indicating to us that inflation is actually picking up. All right, so it's still rather in a lackluster trend in the last 4 months or so. So if you look at this situation here, right, at this point in time over here is that yes, we know that inflation numbers is not coming down very, very fast, but it's also not picking up speed as well. So overall, it's more like a kind of a lukewarm situation in terms of the inflationary trend scenario in US. So that actually kind of keep the Fed dovish pivot expectation alive. That means, i.e., there's still a high odds that the Fed will be potentially cutting interest rate this year. The only thing over here is when will they be cutting? So market is actually expecting a high probability in June, which is the summer months, and as well as the number of cuts will be likely between 3 to 4. So that is still within the market expectation based on the interest rate futures pricing. But however, that kind of see a bit of near-jerk reaction in terms of the market performance, where actually the 10-year US Treasury yield actually went up by 5 basis points to around 4.2%, but still remains below the 200-day moving average. So if you look at the 10-year US Treasury yield over here, where is the yield? Yeah, on my screen. Good. So if you look at the 10-year US Treasury yield, right, at this point in time, it's still hovering below the 200-day moving average, despite yesterday the 5 basis point increase to print a high of 4.1%. 0.17%, but it's still below the 200-day moving average. That is acting as a resistance at 4.2%, and also confluencing the lower limit of this descending channel that I drew from the high of 23rd of October. So overall, right, we still see a bit of a softness trend going forward on the US 10-year Treasury yield, despite that initial bump up yesterday. Okay, that intraday bump up yesterday, because it's still hovering below the 200-day moving average and the 4.2% key intermediate near-term resistance level. And because of this bump up yesterday in the US 10-year Treasury yield, we do saw the gold prices finally managed to do a bit of profit-taking activities. Gold actually went down negative 1.1% after 9 consecutive days of higher daily closes. But however, gold managed to hold above that 2,153 key short-term pivotal support that we'll be highlighting since the start of this week. So more on the gold chart later when I covered the short-term technical outlook. So for the dollar was mostly mixed yesterday. So the dollar index was unchanged yesterday. So a bit of mixed performance on the US dollar in terms of the major pair. But overall, the performance was mixed. And what we could see over here is despite the push out in the US 10-year Treasury yield, the benchmark US stock indices managed to help firm yesterday after that initial yo-yo among the intraday movement upon the release of the CPI data, but they ended the session rather positive, with the outperformer will be the Nasdaq 100 up 1.5%, followed by the SPX up 1.12%, the Dow Jones 0.61% positive, and the Russell 2000 almost unchanged. So the as usual, the biggest gainers yesterday were the 7 mega cap stocks. Okay, and for sure, Nvidia is up by positive 7%. Okay, so with that, right, let us now take a look at the short-term technical outlook. So we're done with the what happened yesterday. So let us start with the FX market first. All right. So on the FX market, what we could see yesterday, let me share with you my screen. Okay, let us start with the euro dollar first. Okay, so in terms of the short-term technical outlook, okay, let me expand my screen so that you guys could see. Okay, so overall, right, the euro dollar at the start of this week, we still have that bullish bias because it's trading within this short-term ascending channel that I drew from the low of 14th of February. You could see on my screen here, the euro dollar, and the hourly RSI continued to hover above a parallel ascending support level at around the 38 level. All right, so yesterday, yes, it do a bit of pullback. That's within the expectation, and that pullback managed to pause right at the first support level at 1.09, but we do have the 1.0890 as the short-term pivotal support level, which is this former minor range resistance broken out now turns into a pullback support. So still no change, still using given that the support level still holds in yesterday's minor pullback, so still using that 1.0890 as my short-term pivotal support level to maintain this short-term bullish bias on the euro dollar. First resistance level to watch 1.097 followed by 1.10 figure level, which is close to the upper limit of this minor ascending channel. Only an hourly close below 1.0890 will negate this bullish tone to see the extension of this minor corrective pullback towards the to expose the next we call it near-term support level at 1.0845, which confluence with the 50-day, 200-day, and the 20-day moving average, all acting as a support at this similar level at 1.0845. Then what's up next for the sterling dollar? So for the sterling dollar, yesterday the pullback, it did much more steep as compared to the euro dollar. So for today, will be but the RSI managed to actually exit from the oversold region after that pullback take shape. So I'll be using 1.2730 as my short-term pivotal support level for today, still maintaining that short-term bullish outlook on the sterling dollar. So this 1.2730 also confluence with a key Fibo retracement level, taking into account of that prior minor rally from the low of 1st of March. So that actually confluence with the 50%, all right, Fibo retracement. okay, before shaping that bounce yesterday. So 1.2730 short-term pivotal support level, still maintaining that short-term bullish outlook on the sterling dollar. First resistance level to watch will be 1.2825, then followed by 1.2880. So that is the last Friday minor swing high. Only hourly close below 1.2730 will negate this short-term bullish outlook on the sterling dollar to expose the next near-term support zone at 1.27 figure, 1.2770. So this is also the so-called the confluence level between the 50, 20, and the 20-day moving average, and as well as this minor ascending channel from the low of 14th of February. Then what we have over here will be the Asia region, the Asia Pac currency against the dollar will be the Aussie dollar. So Aussie dollar, we do have a bearish bias yesterday. So almost hit the first resistance at 65. It's first hit the first support at 65.80. Then below it will be 65.60. So still no change. Still using the 65 650 level. So as long as this 6650 level is not surpassed to the upside, potentially it could still be in the midst of doing this minor corrective pullback scenario. Then support level to watch for sure will still be 65.80 followed by 65.60. Only an hourly close above 66.50 level will invalidate this short term corrective decline scenario to resume it potential to resume its potential minor uptrend phase on the Aussie dollar, with the next resistance coming in at 67.10. So what 67.10? It actually correspond with the 61.8 Fibo retracement of that previous uh, medium term decline from the 28th of December high all the way to 14th of February low, and also this congestion area over here as well between 11th of Jan to 9th of Jan. All right. Then dollar yen over here, dollar yen yesterday we were bullish. Look out for that potential counter trend rebound. So that potential counter trend rebound level has really been met at this 14770, 14815 level. Okay, previously this counter trend rebound scenario been met. So with that, right, we will actually given that it shaped that bearish reaction right off this 4815 level, which is correspond to that 50-day moving average as well. So with that, I'll be using a Titan key short-term pivotal resistance for level for today. Okay, at this level here. Okay, so this level will be at 48.30. Okay, okay. So 48.30 will be my short-term Titan pivotal level for today. Okay, let me tidy it up. Okay, I'll remove this. Okay, so as long as 48.30 Titan short-term pivotal resistance holds on the dollar yen, so we will have that short-term bearish bias on the dollar yen. First support level to watch will be at the 200-day moving average 14620. Below 14620 exposes 14550. Only an hourly close above 14830 will invalidate this short-term bearish bias on the dollar yen to see the potential continuation of this minor counter trend rebound scenario, with the next resistance coming in at 14880. Above it exposes 14950 on upside, which is correspond to the downward sloping 20-day moving average, also acting as a resistance at this 14950 level. Now that pretty much sum up for the FX market over here. So over the FX market over here, we do see in a nutshell potential dollar weakness coming back into the shorter term aspect, except for the Aussie dollar. Now major stock indices. So let us start with the Hang Seng 33. Hang Seng index, pardon me, or the Hong Kong 33 index. So for Hong Kong 33 index over here, yesterday we flipped to a bullish bias on Hong Kong 33. So managed to hit the resistance level at 1710, 17,130. So with that, potentially right now with the RSI at the overbought level, okay, and we hit this extreme overbought level, and it could show signs of a potential minor pullback at this juncture. So as long as this minor pullback managed to hold this former minor swing high area of 23rd of Feb and 27th of Feb, that prevent the prior bullish prevent prevent the price action from shaping the up move in the last 2 weeks. So this level here will be a critical pullback support zone, with the lower limit of the zone at 16,760. So as long as 16,760 short-term Titan short-term pivotal support holds for today on the Hong Kong 33 in any potential pullback, we will still maintain that short-term bullish outlook on the Hong Kong 33 index for this extension of this minor counter trend rebound scenario to play out. The next we call it near-term resistance level to watch will be at 17,570, which is also close to the upper limit of this ascending channel that I drew from the low of 22nd of January, and also the 200-day moving average acting as a resistance level at 17,570 as well. Only an hourly close below this 16,760 will invalidate the short-term bullish outlook on the Hong Kong 33 to see the extension of this correct pullback towards to retest the 20-day moving average, acting as a support now at 16,550. We also confluence with the former minor swing high of 6th of March and 7th of March, and below 16,550 exposes the next near-term support zone of 16,290 slash 16,135, which confluence with the lower limit of this ascending channel that I drew from the low of 22nd of Jan, and as well as the 50-day moving average acting as a support at 16,135. All right. Japan 225. So Japan 225, yesterday we are looking for the bounce, yet the bounce take shape and hit that resistance level before shaping that bearish reaction. And where it shaped that bearish reaction is very important. Why? Because it reacted off a two key technical element: 20-day moving average acting as a resistance, and as well as the former ascending channel support from 8th of Jan 2024 low. All right, this pink line here, dotted pink line. So all of them actually correspond at 39,210 level. So that was initially that counter trend rebound resistance level that we watch out for. Then given that that level has been hit and a bearish reaction has been shaped overnight, so with that we'll be now resuming our bearish bias on the Japan 225 for today. So flip to a short-term bearish bias below 39,210 short-term pivotal resistance. For the Japan 225, first support level to watch out for will be at 38,100. A break below 38,100 exposes the next support level at 37,360. We also confluence with the upward sloping 50-day moving average. Only an hourly close above 39,210 will invalidate the short-term bearish outlook on the Japan 225, potentially to see a kind of a minor recovery. With the first resistance level to watch will be at 39,640. Above it, sees the next we call it intermediate resistance zone to come in at 40,490 slash 40,690. Then what do we have on the German 30? So German 30, yesterday we were neutral. So the price action broke above the upper neutrality limit at 17,900. So with that, we'll be flipping back to a bullish bias given a break above the upper limit of the range. So given that the RSI right now has really started to exit from the overbought zone, okay, overbought zone over here, so there could be a chance of a minor pullback taking shape today. First support level to watch will be 17,900, then followed by yesterday's minor swing low area, which is at 17,790. So I'll be using 17,790 to as my short-term pivotal support for today to maintain this potential short-term bullish outlook on the German 30 index. Resistance level to watch: first resistance 80,050 slash 80,100, second resistance 18,190, which confluence with the upper limit of this minor ascending channel that I drew from 14th of Feb low. Only hourly close below 17,790 invalidate this short-term bullish outlook to see the another round of minor corrective decline to unfold. Next support level to watch after 17,000, below 17,790 will be the very clear range support, minor range support area that is in place since 29th of February, which is at 17,650. Now, for the US indices will be rather mixed. So given that the US Wall Street 30 still hovers below the short-term pivotal resistance that we highlighted yesterday, 39,100, but it managed to surpass back above the 20-day moving average. All right, so with that, I'll be using these two level here to as a neutrality, flip to a neutrality bias, a neutral bias for today on the US Wall Street 30, given kind of a mixed element. So 39,100 followed by 38,730. Okay, only an hourly close above 39,100 will kind of validate that bullish bias back into the US Wall Street 30, with the next resistance coming in at 39,400. Then what we have on the Nasdaq 100. So Nasdaq 100 over here, yeah, it managed to actually retest the 20-day moving average, come break below it, and start to shape a bounce. So yesterday we do have a bearish bias holding below the short-term pivotal resistance at this potential, we call it double top formation, minor double top formation at 18,335, which is the neckline resistance. This is the double top resistance, minor double top resistance level as well. So given yesterday's strong positive reaction of the 20-day moving average, so we'll be flipping to a neutrality stance, mixed element. So turning neutral for today on the Nasdaq 100 as well, between 18,335 and 18,035. Only an hourly close above 18,335. There's a breakthrough above this level, will potentially see a bullish, we call it a bias revival, with the next resistance to watch out for will be at 18,435 / 18,470, followed by 18,565 / 18,626. Okay, now for WTI crude oil. So WTI crude oil, West Texas oil, no change, going to actually trade below the 200-day moving average, I think as a resistance at 78.14 level. So I'll be still using the 80.55 because it's kind of whipsaw around. It kind of whipsaw around this level here. Okay, because I don't want to tie it so tight at the 200-day moving average, which is at 78.14. So I'll still be using 80.55. So 80.55 as a short-term pivotal resistance, still maintain that short-term bearish bias within its kind of a complex medium-term range configuration. Next support level to watch out for, or I will say next intermediate support level to watch out for, will be at 76.20 / 77.75. 75.75, which is so confluence with the upward sloping 50-day moving average. Only an hourly close above 80.55 will invalidate the short-term bearish bias to see the next near-term resistance coming in at 81.65, followed by 82.80 / 83.20. Now, lastly will be spot gold XAU / USD. So if you recall, yesterday we do have a bearish bias holding above, holding at the 21.53 short-term pivotal support level. So price action indeed pull back and shape a minor bounce from this level, okay, at 21.53. So as long as 21.53 short-term pivotal support holds, we will still maintain that short-term bullish outlook on spot gold. And given that the RSI has managed to exit up from the oversold region as well. So going forward over here, still maintain that short-term bullish bias on spot gold XAU / USD as long as 21.53 short-term pivotal support holds. First resistance level to watch will be at 2,200 / 2,210. Only an hourly close below 21.53 will invalidate or negate this short-term bullish bias to see the extension of this minor corrective decline towards the next support zone at 2125 / 2110, which also I think confluence with the 50% Fibo retracement of this prior steep up move over here. Okay, 30 and 50% Fibo retracement. All right, so that pretty much sum up for the short-term technical outlook on the various cross asset classes. So before we go, let's take a look at the key economic data calendar of what are the key events to look out for today. So going today over here, we do have some GDP numbers up from UK. So this is the monthly GDP for January, up at 3 p.m. Singapore time, then followed by industrial production as well at 3 p.m. Then thereafter, throughout the session, we do see a couple of ECB officials speaking at 4:25 p.m. ECB whatnot, and ECB officials Cipollin speaking, okay, 7:45 p.m. And going toward the US session for today will be rather quiet, no key economic data release for the US session for today. All right, so with that, thank you for your time, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.